All right, so let's talk about it. So I'm sure you've probably seen people post their gains in the stock market, and you're trying to figure out how in the world do they know where to get in and where to even get out, which that's usually the hardest part. Where do I get out? Well, they're using something called technical analysis, which usually involves a chart, that chart being, in most people's case, a candlestick chart, and they're looking at where people being big institutions, where they are buying stocks and where they are selling stocks. So in this video, I'm going to be showing you candlesticks, the green ones, the red ones, the big ones, the small ones, the weird looking ones, and we're going to be discussing what they mean and how they work. Okay, so go ahead and get you a pen, paper, computer, whatever you use to take notes, and let's get into the video. Hi guys, and welcome back to my channel. If you are new here, my name is Mel, and if you're not new, you're doubling back. I just want to say I have missed you guys. It has been too long. As you know, or if you don't know, I was out on maternity leave, but I am back. My baby is almost a month old, so yeah, we're growing. We're in the newborn trenches, but today we're in the candlestick trenches. I'm going to be discussing candlesticks with you guys, and so yeah, with all that being said, go ahead and let's get into the video. All right, so you may be wondering, what is technical analysis? So technical analysis is basically where you have candlesticks on a chart. It usually has times. Well, it does have times. You have a daily chart, you have an hourly chart. We'll get into that in the video about what it means, but you have candlesticks on a chart with times, and then you have different sizes, you have different looking ones, and people are basically deciding where they should buy a stock and where they should sell a stock depending on historical price action of these candlesticks. Okay, so in this video we're going to get into my whiteboard. I'm going to bring my whiteboard to the front and we're gonna talk about it. I'm hoping that you get a pretty good understanding by the end of this video what it means, a basic overview. This is part one. There is going to be a part two because there is so much to learn about candlesticks. It takes time, but you can do it. We all can do it. Okay, so let me get my board over here to you and let's get into the video. All right, so I have my whiteboard out, and so the first thing I want to talk about is these two candlesticks here, because this is just the basics. Okay, so first off, you see up here I have something called bullish, and then up here I have something called bearish. Okay, so notice on the bullish side it's green. Hopefully you can see that it's green. My marker started to go out, but the bullish candlestick is green and the bearish candlestick is red. Okay, so what bullish basically means is that the investor or trader thinks that the stock price is going to go up in the future. Okay, and then on the bearish side, the red candlestick, the investor or trader thinks that the stock price is going to be lower than where it is sometimes in the future. Okay, so let's look at the anatomy of this whole candlestick. Okay, so you see on both sides, the bullish and the bearish, we have the body. So this whole hollow part is the body on both sides. We have wicks on the top and the bottom on both sides. The wicks represents the highs of the day and the lows of the day. And then depending on what color the candlestick is going to tell you where the price opened and where the price closed. Okay, so for example, you see on the bullish side, remember I told you that they think that the price is going to be higher in the future. So the price opened here at the bottom. So let's just say that they started and the candle opened at $12, right? The wicks, remember I said, represents the lows and the highs. So let's just say the price opened, when the market opened and it opened at $12, it went down to $11. That was the low of the day, which is representative of the wick. And then all throughout the day, maybe it went up here, and then we got all the way up to $16. That was the high of the day. Well, then it closed here at $15. So it's green or bullish because it closed at a higher price than where it opened. Hence, remember I said that investors think that the price is going to be higher than where it opened at. So that's why the close is always higher on a green candlestick than the open. Okay, and so on the other end of that, over here on the bearish candlestick, we have the reverse. So pretty much everything is the same except for the open and close on each candlestick. You have the wicks, which represents the highs and the lows. You have the body of the candle, which is the hollow part. But notice that in this case, let's just say the market opened that day at $15. We opened at $15. the market went up to $16, but then it was bearish, meaning that sellers pushed the price all the way down to $11, but then it ended up closing at $12, okay? Because once again, a bearish candlestick means that they think that the stock price is going to be lower, and so that's why the closing here is at $12. Okay, so once again, we have the body of the candle, we have the open and closing depending on if it's a red or a green candlestick. Just know that if it's a green, that means that the price closed at a higher price than where the market opened. If it's red, that means that the stock price closed at a lower price than where it opened. And then once again, we also have our highs and our lows. And then also something that I want you to take into consideration is that we consider the open and closing the basis of the candle, and that'll make sense later on. Okay, so that is the basics of what a bullish candlestick is and a bearish candlestick is. All right, so I pretty much gave you a rundown of the basic anatomy of the candlestick when I showed you the bearish candlestick and the bullish candlestick, meaning that they were green and they were red, and the wicks and so on. But one other candlestick that I do want to discuss in this video, the beginner's video for candlestick, is the indecision candle. So indecision candle is basically where buyers or sellers are coming together and they're trying to decide whether or not the price is a good price, and it's kind of like a tug of war. Okay, and so with the indecision candle, you have doji candles. I'm sure a lot of you probably heard of a doji candle, which is like the indecision candles. Usually an indecision candle is found at the top or the bottom of an uptrend or a downtrend, and it usually signals that there may be a reversal that's about to happen. But one thing about it is you want to make sure you have a confirmation candlestick. If that doesn't make sense right now, we'll get into it in the real charts later, and they'll make a little bit more sense. But one thing about the indecision candle, since you know the anatomy of a candlestick now, there is not much body, little to no body on most indecision candles, especially on a doji candle. And then you may have either long upper wicks, you may have long lower wicks, you may have a long upper wick and no lower wick, or vice versa. So we'll get into the indecision candles on the board as well. All right, so next up we have our doji candles, and what doji candles are what we call indecision candles. So basically you will find these usually at the top of a pattern or usually at the bottom of a pattern. They don't necessarily have to just be at the top or the bottom. You may find them in the middle, but what they signal is that there may be some change in the momentum, or there may be it's considered a reversal pattern or candlestick for the most part. So for example, let's just say you see a lot of the green candles that I was mentioning to you earlier, which were bullish candles, and then all of a sudden at the top you see a doji candle. It could mean that instead of the bullish candles, meaning that the people are buying, that now that the trend may be reversing and people may start to sell off. But always wait for confirmation. If you don't understand what that means, we'll get into it a little later. So basically, these are your different types of dojis. You have a dragonfly doji, you have a gravestone doji, and then you have something called a long leg doji. And what basically a doji is basically where the open price of a stock and the closed price of a stock pretty much ends in the same place. Okay, so like for example, we mentioned earlier in the bullish and the bearish candles where you had a stock that maybe opened at $12 but closed at $15 in a bullish candle, and the reverse for a bearish candle. Well, with a doji candle, it basically says that the price may be opened at $12, it went up to $15, but then it came back and it closed at around about $12 as well. So this just basically means that people were trying to decide whether or not this was a good price still to buy or sell it. So it's called the indecision candles because buyers and sellers are trying to come to terms to basically what's a good price, or if it's a good price or not. So with the dragonfly doji, this doji here, you normally will find this at the bottom of a downtrend. So let's think about it like this. So you had people that were selling, you had more sellers down here, but then if you see a candle like this, you may be thinking, oh, well, there's some indecision because the price opened up here. It was looking like it was pushing down, but then buyers came back into the party and they bought it up where it end up closing at pretty much the same price that it opened at. So I said to wait for a confirmation candle. So a confirmation candlestick is basically the candlestick that confirms whether or not the buyers actually did indeed take over. So you basically, once again, on the Dragonfly Doji, you had people selling, you had sellers, and then it looks like it was still going to sell off, but then buyers came and pushed it back up. And then over here on the next day, you had the price actually shoot out. So this is a bullish candle. So that means that the buyers indeed did take back over. So always wait for confirmation. At least that's what I do. Okay. And so let's go over to the next one, the Gravestone Doji. So with the Gravestone Doji, it's the opposite of the Dragonfly. It's normally found at the top of an uptrend. So as you can see, you have a green candle. You have a green candle. So people were buying. And then up here at the very top, you had the open price. It looks like it was going to shoot up because you got this long wick up here, but then it got shot right back down to pretty much where it opened. So this lets you know that maybe buyers are kind of getting exhausted and people are starting to sell the stock right here because it ended up closing pretty much at the same price that it opened at, and you don't see these long, large bullish candlesticks anymore. So once again though, we have to wait for confirmation. And then on the next day after this Gravestone Doji, let's just say if you were to see the bearish candlestick, that means that sellers did indeed take over and the stock is now selling off, which signaled from the Gravestone Doji that the Gravestone Doji was in fact correct, meaning that the reversal is probably starting to happen. And then the last thing on this doji candle chart is you have the long leg doji, which is the more common doji. You may see this one a lot more often, but basically you have the stock price opened here and then it went up and went all the way down with you signifying these 2 wicks, and then it ended up closing pretty much at the same price where it opened at. So there was a lot of indecision. Basically the price opened, just say at $14, price went up to $15, went down to $13, but then it ended up closing pretty much exactly where it opened at. So that means that it was a lot of indecision in the market. You can see this type of doji usually at the top or bottom of a downtrend. And once again, always wait for confirmation. So if you see it at the top of an uptrend, you want to make sure you get the confirmation candle, which will be a bearish candlestick that leads out the next day. Or if you see this at the bottom of a downtrend, once again, want to wait for confirmation that you see a bullish candlestick that leads out the next day. Okay, and so those are our different types of doji candles, which are indecision candles. Once again, dojis are usually where you have long upper or lower wicks or shadows. Some people call wick shadows, but you have very small bodies, little to no bodies. And remember, the body of the candle is the top and bottom of both bases. But in the doji case, you really don't have a body because there was so much indecision where the price opened and closed pretty much at the same spot. I hope that makes sense. Okay, so we've gone over the doji candles on the chart. Another type of indecision candle that I wanted to bring up, and there's actually 2 of them. There is a shooting star candlestick, which is usually found at the top of an uptrend. Think shooting stars in the sky. And then on the other end of that is the inverted hammer, which is usually found at the bottom of a downtrend. And the reason why I'm putting them together is because they look similar. They're just turned different ways. And I'm going to show you that on the whiteboard as well. But the one thing about the shooting star and the inverted hammer is you have a wick that is about 2 to 3 times longer than the actual body of the candle. Now, unlike the doji candle, you do have somewhat of a body on the shooting star and the inverted hammer, but it's still normally a small body relative to how long the wick is. Okay, and so I'm going to show you that on the whiteboard as well. All right, so the last candlesticks that I wanted to show you on the board was the shooting star and the inverted hammer. So the shooting star is normally, you'll see this at the top of an uptrend, and then with the inverted hammer, you normally see this at the bottom of a downtrend. And so the psychology of this is kind of like the same thing as the Gravestone Doji and the Dragonfly Doji. except for you do have some body on the candle, just a small body with the upper long upper wick or a lower long wick. So with the shooting star, you see that the price, and it could be red or green, it doesn't really matter, but you see that the price opened here, just say at $10. The price may have went up to $12, but then maybe it closed down here at $9. And once again, it could be red or green, it doesn't really matter, but you're just looking at what the candle actually looks like. So you have a long upper body followed by a short body. I'm sorry, you have a long upper wick, and then you have a small body on the shooting star. And once again, this is normally at the top of an uptrend, but once again, you also want to wait for confirmation, just like you would with any other indecision candles, like in the doji case earlier. And then on the inverted hammer, you normally see this at the bottom of a downtrend, and it could signal a reversal. Just kind of remember that the shooting star is up in the sky, and then in the inverted hammers at the bottom. So you have a long lower wick followed by a small body at the top. And just like in the shooting stars case or any indecision candle, and I'm saying this over and over because I want you to get this, you always want to wait for confirmation. Okay, so what I also want you guys to understand is there are time frames. And so at the end of this video, I'm going to pull up different charts and use real examples of what I'm showing you as far as the candlesticks and how they appear in like real time. But there are time frames. So each candle represents a time frame. So you can see like a daily chart, you could see a 15-minute chart, you can see a 60-minute chart, and so on. And one thing about it is, just say for if you're looking at a daily chart or a daily candlestick, you can go into that particular candlestick and you can see how the price action of the daily candlestick played out. So if this doesn't make sense right now, I'll show it to you at the end of the video, but I did want you to know that time frames are important when it comes to candlesticks. Okay, so I wanted to bring up a chart and show you guys a real example. So as you can see, this is the NVIDIA chart. I'm on my simulated account. And so, as I mentioned earlier, each candlestick represents a time. Over here in the corner, you can see that this is the 15-minute. And I'm going to hit the drop down so you can see that you can change the time frame. If you change the time frame, it's going to look a little different. This is what a daily looks like. Sorry about all the lines. But let's switch it back to a 15-minute because I wanted to show you the dragonfly doji on this NVIDIA chart. Okay, so this happened on Friday the 18th. So as you can see here, the price of NVIDIA was selling off when the market opened. And you can see as I hover over it, this is at 9:15. You can see down here at the bottom, once you hover over the candlestick, it'll show you the time and the date. So this was at 9:15. NVIDIA was selling off. NVIDIA continued to sell off, and you see every time I go over, it's 15 minutes more. So you got 9:15, you got 9:30, you got 9:45, and so on. And so down here we had this very long seller's candlestick because it is red. And then you see down here, as I mentioned, you have that dragonfly doji. So this is where price basically opened here at the top base. It looked like, if you were watching this in real time, that the sellers were continuing to sell off, but then buyers stepped in and they basically pushed the price back up, and it closed pretty much at the same area where it opened. The closing price and the opening price was at the same. So if I hover over this candlestick, I can look up here at the top right here. So if I hover over this candlestick, I see that the open on this was at $171.84, and that the close on this was at $171.82. So pretty much they were the same. So this was an indecision candle. But you remember I mentioned in the video that you need to always wait for confirmation, because sometimes it could be false and the price could eventually continue to sell off. But if you go over to the 10:30 candle, the next candle after this dragonfly doji, you see that the buyers actually came in and they did take over. They won. So here you have this long bullish candle where buyers came in. Okay, and so you may be wondering, okay, so where do I actually buy? So this is what I say. Some people will buy on the breakout, this green candlestick, bullish candlestick being the breakout, and they would put their stop at the bottom of the dragonfly doji. But what I personally prefer to do is, you see where it was people were buying, and then they kind of stalled out and they came back down and they retested this zone. So when they retested zone, this is where I personally would prefer to get in, just because you have a little bit more room on your risk tolerance. To basically make a little bit more money, and then you could just kind of put your stop at the bottom. So you can see it came down here at 11:45 on Friday, and it hit that zone. And so by zone, I mean you have, I draw my zones at the base of the top of the base, and then I put it at the bottom of the wick, and that's my zone. And then I put my stop a little bit below the bottom of the wick. And this is just to kind of give you some breathing room if your stop price were to go through. So you won't get stopped out, because that happens sometimes. But as you can see at 11:45, it came and it retested that zone. And then it's kind of just consolidating. So this was the close on, and then it touched here too at 2:45 right before the market closed. And then you see we have another breakout. And this right here is actually showing me something. It's like it's a breakout, but we won't get into that. I don't want to confuse you in this video, but we'll get into it in part 2. But I'm curious to see what happens with this chart on Monday. Tomorrow, I'm recording this video on Sunday, the 20th. So I'm curious to see where this is gonna go on the 21st at market open. So yeah, this pretty much held up, but this is kind of just consolidating, meaning that it's just kind of going to the side. So now I have another chart up. This is SPY, and this is the daily chart. So a daily chart is really good for people who like to swing trade, meaning that you want to get into a stock and you want to hold a stock for a period of time. So we're going to be looking at a shooting star this time, which, like I mentioned in my video, shooting stars typically could be found at the top of an uptrend. And just remember, shooting stars are in the sky, and it could signal that a reversal is about to take place. But always, once again, wait for confirmation. So this, in my opinion, was a really good example. Here we have the SPY, and this was back in December of last year. As you can see when I hover over it, this is on December the 6th, and this was that daily candlestick, because this is a daily chart. As you can see over here, the time interval is daily. Okay, and so you can see where price was going up. People were buying up the stock, and then all of a sudden we got right here and we see this. Let me make it bigger so you can see. Okay, and so you see this candlestick up here at the top. And remember, I said it could be green or it could be red. It really doesn't matter. This particular candlestick was green. It's all about how it looks. So you have this long wick, this long shadow, some people call them, at the top. And then you have this lower small body at the bottom of that candlestick. So basically you had price open down here at the bottom. People were selling just a little bit, and then they pushed it up. So it seemed like, you know, the price was continuing to go up. And this is why it's so important to always make sure that you wait for a candlestick to close, because had you bought thinking that, oh, well, we're going to reach new highs and I'm going to jump in here, you probably would have lost your money. So just always wait on a candlestick. And this is why I like retest when it comes to breakouts. Okay. And so it went up, and then the sellers though pushed it back down, so it closed pretty much at a same spot where it opened at. Okay, so it's green, so it closed at a higher price than it opened, but it's still a shooting star. Okay, and so then the next day though, you see we have this bearish candlestick, and remember, bearish means that the sellers took over. So the sellers came in after this shooting star, and they confirmed that indeed that we were reversing. So price came out, continued to come out, and then here's a retest here. boom. So had you charted this and you got back in, you took this trade and you see it kind of, and this is why you need to be patient as well in the stock market, especially when it comes to swinging, because if you would have bought this, you would have been in this trade for 1 day, 2 days, 3 days, 4 days, and you're thinking like, oh my God, I'm waiting for something to happen. What if you were impatient and sold up here? And then all of a sudden you see here on the 18th of December, price just massively drops. So had you taken this trade, this would have probably been, if you would have had your stop just a little bit above the high. And so like I mentioned in the Nvidia trade, when I draw my zones, I always put my stop a little bit below, a little bit above, depending on which way I'm taking the trade. And so this would have been a short position, meaning that I would have made money as the price came down, versus a long position where you make money when the stock price goes up. So because this would have been a short position, I would have put my stop loss at the top of the zone. And that way, if it would have, sometimes manipulation happens and the price may shoot through the zone a little bit, but that's why I always give myself a little bit of wiggle room. But had you stayed in this position, you probably would have made, I'm gonna say, at least 6 to 7 times your money. Okay, so just say if you would have been risking $100, you could have made like $700 in like the course of like a week or so. So that's why it's always important to be patient. And so as you can see, the price came down, and yeah, you would have made a significant amount of money. And so yeah, that's the shooting star example that I wanted to show you using the SPY daily chart. And this once again happened back in December of last year, December the 6th to be exact. All right, guys, that's pretty much it for the video. I'm so happy you guys are back and you enjoyed this video. If you did enjoy this video, go ahead, like, subscribe, please share my content and help me grow my channel. And let me know down in the comment box what you would like to see next. Give me some ideas of what the people want to hear, okay? Once again, thank you guys for watching, and I'll see you in the next video.